one of the things that was coming up was probably from some of those businesses within the groups that they're established, they've already scaling, and they've now got, they've got consistent profits, and they're now thinking, okay, I want to invest. So what's the best way for them to deal with spending money on those investments? So whether it is buying gold or property or whatever it might be.
So if I had a lot of money and I wanted to buy property, I may decide not to buy it in a limited company. So number one, I've got a lot of money. So that means I don't have a mortgage. So if I don't have a mortgage, I'm not worried about Section 24, which is where the mortgage interest relief is restricted to 20%, and it's not a tax expense in my rental accounts. So the beauty about that is that the Chancellor, in his last budget in March, announced that capital gains tax on residential properties going down from 28% to 24%. Therefore, if I own the property in my own name, I know that my maximum liability on the sale of that property on the capital gain is 24%. If that property was owned in a limited company, I know that the corporation tax rate is 25%. So therefore, the corporation tax rate is higher, and then I'm going to pay income tax when I take the property out. So it's going to add up to way more than 24%. So if I did have a lot of money, I might want to go down that route. If I wanted to invest, I may consider passing money around the family. So you might want to set up a family investment company, which some people have come across. And that may be that I start a business, say today, and might have shares for the rest of the family, a lesser amount of shares for me, and then I can lend money to that company, and that company can make investments. And that means that the capital gain on the shareholders will be owned by my children and not me, and therefore I've mitigated some inheritance tax liabilities. Because rather than increasing the value of my estate, I've increased the value of their estate by lending money to the limited company, and the limited company makes the investments. So a family investment company is the way that a lot of people plan their affairs to mitigate inheritance tax upon their death.